If you have been struggling with day trading and you enter in the market and you take a buy, the market goes down, you take a sell, the market goes up, and you are confused, not knowing exactly what to do, in this video I'm going to show you the day trading secret that you need to start implementing right now to transform your trading journey. Okay, it's very easy. Now, most times people tend to look for trades without understanding the storyline of the market, because the market tells a story. All the videos I'll be showing you here in this channel is all about storytelling, because that is the key you need to be successful in forex trading. Okay, now just like any other style of trading, in my previous video I did a swing trading secret that can help you become a better swing trader, and in that video I talked about you looking for 3 time frames. Okay, this is all you need when it comes to multi-time frame analysis. All you need is 3 time frame analysis. Now, the difference between these and other time frame analysis you have been taught is that they do not tell you exactly where the price is going to in the long term, because this is very important, and that is the price objective. If you understand the price objective of any currency pair, then that currency pair becomes easy to trade. The moment you don't understand the price objective of a currency pair, leave it. Look for other pairs where the objective is clear, and in that case you start looking for what trades in that direction. Okay, do not be confused by trying to trade a particular pair because you just love that pair. No, trade a currency pair or any financial asset once you understand the price objective. Now, for day trading, these are the secret time frame that you need to be doing. Okay, the first one is called the price objective time frame, and in this time frame we are looking at the daily and the H4. This is your price objective time frame, because in every time frame there's always an objective. Price move to get a particular objective. The objective could be to clear old highs, okay, or to fill up imbalance. Okay, either to take liquidity that is in form of old highs and lows, or it rebalance. That is the price objective. If you don't understand price objective, in my first series of storytelling I explain all about this, so you can go check it out. I will put it in the card somewhere up here for you to consume the moment you are done with this. Okay, so your duty now as a trader is, when you look at the daily time frame, you ask yourself, identify where the price is currently. Okay, current price level, look above and look below. Price, we need to do two things. It's either it goes up, take out this liquidity up here, or it comes down, taking out this liquidity below. Now you don't need to be guessing. I'm going to show you how to understand or know when price will be heading up here. So stick to this video, do not go anywhere. Smash that like button so that the algo will push this out to a lot of traders, so that I can help transform their trading. Okay, so once you identify where the price is heading to, just 2 things you need to know. You look at the word candle anatomy. Okay, and in this case I talk about the rejection candle a lot. This is important because when price meets an objective and intends to go to the opposite direction, you tend to look for what? Rejection. Okay, but if price close below a particular objective, then we seek for that what? Push in price. These are the 2 things you need to know. There's no rocket science to this. If price, let's assume this level is your target and price has been moving up there. Now when price gets here, you need to observe what price will do in here. If price move up and then came down with a close below that level, this should signal to you that price wants to seek lower price, because that objective has been met, and because price do not close above it, we want to see price push to the opposite objective. But if price close above this, okay, on that particular time frame, then you'll be looking at ways to continue looking at further pushing price. Probably price want to seek for higher price, okay, maybe another objective up here. So that's how you keep building position to reach higher prices. Now there are some complexities in this that I'll reserve for future videos, okay, but in the meantime, this is what you should be looking for: rejection for reversal, strong bullish close for what? Continuation. Okay, let me get rid of this. Now once you understand your price objective time frame, in this case for a day trading, because we want to be taking trades and executing them, closing them out within the day, okay, that's where the name day trading comes from. Okay, so we look at daily of H4. Okay, this is your price objective time frame. Now your setup time frame, based on what the style you use in trading, be it ICT concept, SMC, support and resistance, demand and supply, okay, whatever trend line, whatever style you want to be using, the setup you look for those style here is the setup time frame. And in the setup time frame, we're looking at what? 1 hour H1 and 30 minutes, okay, for day trading, 30 minutes. So if you are an ICT style of trading or SMC, you'll be looking for a chalk, okay, then price comes in, you take price, or a form of displacement. After liquidity sweep, you look for what? Displacement to take price to the upside. Now if it's an S&R, that is support and resistance trader, you might be trading off the higher time frame DZ, WDZ, MDZ, or the YDZ zones, okay. And if the trend line, probably draw a trend line, a break above that trend line might signal bullish prices, okay. Do not listen to what most SMC traders will be telling you that trend line, support and resistance do not work. It does if you are in the right direction in terms of what price objective. This will work, or the chart pattern will work, okay, like the flag pattern is going to work. It's because most times we are always, as a retail trader, you are always at the wrong side of the market, and that is why the market keeps taking you out, okay. And if you apply your regular retail concept with the idea of liquidity, you become a better trader, okay. So I'm not going to say throw all of this away, no, use them, but you can blend it with some of the liquidity concept so that it will help you become a better trader. Now for entry, we'll be looking at 15 minutes or 5 minutes, okay. 15 minutes, 5 minutes or below. You can use 1 minute entry, doesn't matter. What matters is you understanding your top-down analysis from the price objective down to the what? Entry level. So I'm going to show you an example on gold. Historical what? Illustration, but that's the only way you can use in what? Learning. Because if you look at live charts, okay, you might not understand it. So you start first by understanding how to see these trades, then you replicate it from time to time during your practice session in live or demo account, okay. So what you need to do not take my word for it, you go back test all of this, okay, and then it becomes easy for you. Now if you look at the daily time frame here, this is what I want to show to you, the daily time frame. Now when price was coming down here, this low, in case you don't understand the price objective in a particular time frame, you can use the higher time frame to frame your objective, okay. Now looking at this here, if you look at gold market, gold has been bullish for some time, then it came down here, push up, failure to break this high, you see, price rejecting of it. Then what happened? Price went down. This becomes liquidity. Okay, this becomes liquidity. Okay, then not because it failed to break higher. Strong low, weak low. Okay, if you don't understand strong low and weak low, or strong high and lows, I will put a link in the description for you to go watch on my channel. Now, this is the key level that gold needs to break below before we can confirm a bearish move. Okay, all of these are simply retracement. These are retracement for 1, 2, 3, 4, 5, 6, 7, over 7 months. Okay, now when price got here, taking out this liquidity into this other block here, or a supply, a demand zone. Okay, and then price failing to go below this low. Okay, and instead price, you can see we have rejection. Now normally we are supposed to close below this, but if you notice, we did not close below this candle. Okay, this monthly candle, which is a strong indication, and then we form an inside bar. I will talk more on inside bar later. This is a very powerful trading strategy, or inside bar, very powerful. In case maybe you've missed this, you want to wait for confirmation, this is a confirmation that price will head up to this point. Now, because of that, I was then looking for what? Bullish price, because this is just a retracement. At the moment we took out this liquidity here, then we can be looking for a push from here, but we did not take this liquidity. So this is an equal high. This is the long-term objective of gold. We want price to take out this. Okay, so now on that note, if you look at the weekly, what happened on the weekly chart, you can see price tap into this level here, this other block here. You can see, sorry for the diagram. You can see here, this, I feel this is a line. And what happened? We have rejection in price. Okay, you can see price rejected multiple times. Let me take out this. You can see the rejection in price here. This first week rejection indicate that this level will hold, and we should be looking for higher prices. So on your daily time frame, you know your objective. Okay, the moment price gets in here and move up, okay, therefore creating what? A break of structure, like a chalk. Yeah, creating a chalk here. Okay, so when price comes back here, you'll be looking for what? A bullish price action. Okay, this is what I want to show you, this move here to the upside, just in case you are trying to day trade this position. Now most people will be confused. They'll be looking for market to take out this low. Okay, market will not take out this low because it's a strong low. It took liquidity, broke structure. Though even though we have been in a bearish trend, okay, a lot of traders will be deceived to be looking for this level to be taken, which is a big mistake because they do not understand the storyline. The storyline here says that bearish movement is over. What we need to be looking for is what? Bullish prices, price objective. So our price objective is what? Bullish. So we need to be looking for bullish prices the moment price comes back to test our area of what? Key levels. Okay, so on that note, you go to your what? Your setup time frame, which is the 1 hour. Now looking at the 1 hour, okay, if we refine that level, you are going to see that the 1 hour we have an order block here with a strong push above all of this bearish candle and creating a what? A fair value, and creating what? A fair value gap here. Okay, meaning you have to be patient. Sometimes in trading you need to be patient. Okay, wait for price to come in here. This now becomes your what? Auxiliary zone, or auxiliary what? Point, AP, your auxiliary point. Because if your price direction is bullish, okay, whatever POI that support that direction is your AP, and I will talk more on this AP specifically, so do not go anywhere. Hit the like button, subscribe to this channel, okay, so that when I release video on AP, you understand it better, because this is a new concept I'm trying to let you understand. So you have to wait for price to come into that level. Yeah, as price approaches that level, you are going to what? Watch as price. When price get there, that is your entry signal that okay, we need to be looking for entry move. Now price is approaching there. You can either take the trade here with stop loss below. You are very good, because that low there is a strong low. We don't expect price to take out that low. Okay, you can do that, and then you aim above. But in this case, we want a better risk to reward, so we are going to go to the 15-minute chart. So in the 15 minutes, we are approaching here. So what you need to do is this is what I used to tell my students. You are going to monitor the last low that took out the last high. Sorry, you are going to monitor the last high that took out the lows in form of tracking it. In this case, this is the last high here. So we are going to draw an horizontal line there, and then we want it to take out this low so that we track our chalk. So I will allow price to play. Now price move lower. Okay, this was the low that did that. Now what can you see here? When price took out that low, it immediately moved up. This is displacement. Okay, you want to be seeing this in case you want to take a trade. You want to be seeing this displacement after taking liquidity from this level. Okay, price took out liquidity and then immediately push high. So now we want a fair value gap to be what? Created. So let's see. By so doing, this can do ended, so we have our fair value gap. So next, you can decide to take your entry around here, because I wanted to show you a 5-minute entry, but the trading view data will not allow me to go to this level. So you can decide to take your trade a long position here at the close of this stop loss below. Give it enough space, okay, or you can keep it close. Then in this case, we are just aiming for maybe to clear this liquidity for a quick out trade, okay, for a 2-hour trade. Okay, nothing fancy, but you can try to hold longer. Okay, but you should understand the point of invalidation. This is the point of invalidation here. Okay, because price can still go lower, take out this. The moment price take out this, you can set up another entry here, because price may take out this low, set up another entry at that low with stop loss below, and you'll be good. Okay, so on that note, let's see. You wait for price to come back in. Now we are in the trade, and then watch as price move. Okay, in this case, you are out of the trade. Probably you can aim higher here, okay, for a quick 4-hour trade. So this is how you plan your trade using storytelling. Why storytelling? It helps you understand specifically with 80 to 90% probability where price is heading to, and because you know where price is heading to, you are going to build a storyline around that narrative, understanding your AP auxiliary point, understanding your roadblocks. Do not be trading off the roadblocks the moment price has finalized its objective and it wants to reverse. Okay, if price is reversing now, all those demand zones, supply zones, other blocks, fair value gaps, they become roadblocks. Okay, and roadblocks have lower probability of succeeding. So try backtest this. Okay, do not take my word for it, backtest it and see, and let me know in the comment section what you think of this strategy. So on that note, I will see you in this video.